Meta is currently $608 a share, and I'm betting big on Meta stock. Now, the reason I'm betting big on this, I'm gonna explain to you guys now. So I'm gonna go over some of the technicals right quick, and then I'm gonna go over some of the fundamental news, like their earnings that came out last week, stuff like that. But let's just get into the technicals right quick. So the market is open. It's been open for like almost an hour now, 45 minutes. And we're kind of going up now, leaving a little wick, but that doesn't matter. Let's look at the whole story. So what does matter in Meta? Around August, summertime, we hit a high of 796, all-time high, 796, consolidated for a bit. Then coming into earnings last week, we were around 750. A little bit off the highs, not well off, just a little bit off the highs from 796. We were at 750. Earnings came out and we absolutely gapped down. We gapped down straight to the 200-day, around 670s, 680s, around there. And now there's been continuation. So we gapped down from 750 to like 680. Then we've continued down to where we are now, around 610. Now we are lined up with this gap fill around here. It's from 610, anywhere from 610 to 618, 620. That little $10 range is a gap fill. Then you have the psychological support of $600. We're yet to break under that. And then you have another gap fill here from 550 to like 570, which a lot of people do think it's gunning for this, because honestly, it's weak. It's weak right now, but one could argue it's oversold. Let me see, I don't have the RSI on this, but the RSI is one of the most oversold RSIs since this bull market has began, the last 3 years of 2023. And honestly, there's another gap all the way down here, but I don't think Meta's gonna get down here to like 508 to 515. I could be wrong. Market could turn over. We're already SPY at 666. It was at 690. What is that, like 3-4% maybe? So we're only 3-4% off the highs. If SPY wants to go down for like a 10-15% correction, Meta could most definitely visit the April lows. But you know how cheap it's gonna be? It's the cheapest Mag 7 now. It's probably gonna be like a 17-time forward earnings. And I don't invest off earnings, market cap, stuff like that. This is more of a swing trade, what I got going on here with Meta. So my goal, honestly, is to not even sell if we make a new all-time highs at 800. I'm gonna swing this one to like 2.5 trillion. So if you guys see its market cap, it's at 1.53 trillion. 2.5 puts it around 1K a share. 1K is where I'm gonna trim. So that's where I plan on trimming. I'm going to show you guys my position now. When I go over the fundamentals, I'll show you guys the position I'm holding. So right now it is kind of looking weak, and I'm not saying we're going to go straight to 796, 800 all-time highs now in November, December. Honestly, I hope we could. But you know what? I'll be glad with just filling this gap fill. If we end the year around 750, say, or so, 750, I'll be pretty proud if we're able to do that. If there is a Christmas rally, if there's the seasonals is strong, it's not weak, because we had a strong September and October, which is not supposed to happen. So if they want to screw us over in November and December and have it turned around, they can most definitely do that. Look at 2018, it had exactly just like that. So finishing the year around 750, I'll be super happy with that. If we break and crack 800 by November, December, it'll be even better, because we get to start the year off around 800, 750, give or take. It doesn't matter. I think it's gonna go see 1,000 a share next year. So bullish and bear case now, before I go to the fundamentals. Bear case, honestly, the most I can see is 550 to 570. If it gets down there, we'll reevaluate when it gets down there. So bear case, 550 to 570. Bull case, 750 to 800. That's for November and December. So by end of year, these next 2 months, that's what I got. 570 to 550 on the downside, 750 to 800 on the upper end. So now let's go on some of the fundamentals. So let's get into my position first. This is a tweet of my position. I'm not logged into that Robinhood. I'm logged into my Tesla one right now. So that's why. But I tweeted out, balls deep in Meta, praying it hits 1,000 within 12 months. So we're in November. My target by November of next year. Realistically, I think you'll see 1,000 by summertime, anywhere like June, July, give or take. I think by then we'll see 1K a share. I'm not gonna lie, this tweet kind of blew up. Almost 5K views. Oh no, look at that, 5.6K views. People were commenting on it. It's been rough, but this one is value right now. Told them, I think I'll fight for 3 trill in 2026. Love this. This dude is writing big. He has 1,100 shares at $6.99. Got caught with my pants down a bit, but he's writing it out. And honestly, I told him, yo, it's all good. I expected to hit 1,000 by summer, 6 to 9 months, hopefully sooner, you know. So 6, 9, 12 months in the next 2 to 4 quarters is when I do expect 1,000 a share and the split announcement to be coming. What else? 275 at 645. This guy thinks 2x. This one thinks Meta will be 2K a share, closer to 5 trillion by 2030. So yeah, this tweet kind of blew up. That's a position I'm holding, 200 shares at 650. Underwater on them right now, but I'm gonna be up on them at 1K. I'll probably what will be like 70K. Then I'm gonna trim the 130 that I put in, leave the 70K house money in Meta shares for life. Not really for life, probably like the next decade. If Zuck is still around, probably the next 2 decades, have some free Meta shares, which could probably grow to like 100, 200, 300K. But it's free. It's house money. I'm gonna have the 70K gain at 1,000. Gonna take my 130 out, and then let the 70K ride out forever, or the next decade, you know? So this was the earnings that came out last week. Revenue was 51 billion, and what was the estimate was 49 billion. It was a 26% year over year. You know, pretty good. It's Meta, Instagram, Facebook, WhatsApp. Their ads are gonna keep dominating. And if you think otherwise, like Elon said, 5 years from now, apps will be obsolete. Honestly, that's a tough call. But it's Elon. I have more money in Tesla than I do in Meta. Well, they're kind of even now. But honestly, I think apps are still gonna be here. I love Instagram, and I don't even use TikTok now because of Meta. Adjusted earnings per share was 725, and it came in versus what was it? The estimate of 674. Honestly, that doesn't tell the whole story. This one's gonna tell it. GAAP earnings per share was $1.05. It came down 83% lower year over year. Now, honestly, this came in because of a one-time tax charge, which you're gonna see right here. So basically, they had one huge expense, which was around 15 billion, as you see right here. GAAP earnings per share was significantly impacted by a one-time non-cash income tax charge of 16 billion related to this new tax legislation, whatever. So adjusted earnings per share was 725, beating expectations. Honestly, it didn't, but it's a one-time thing. And the thing about Zuck, right? Zuck has given the street PTSD. If you guys remember what he did in 2022, I'll explain that in my next Meta video when I go more in depth of the price action of the last few years. Zuck, this dude right here has PTSD, or has given Wall Street PTSD, and it's not pretty. This dude would spend a whole bunch of money. And back then, the stock fell from like $400 to $80 a share. Really, the low was 88. But you would see Zuck's net worth crashing. It was all over the news. Zuckerberg is going broke. So yeah, 3 years later in 2025, it's like 6x from the lows, from 80. $100 is what now? 600, 700. So 6-7x. It's been one of the best performing stocks the last few years. It's been a turnaround story. But now with this little one-time tax charge, you really have to take Meta and Zuck at their word. And honestly, I am taking them at their word. I have 130K in that position for a 50% move that I'm hoping will hit within the next 12 months. So then I can trim, have free Meta shares for life. So I'm taking them at their word of this. So earnings really weren't all that, man. It's Instagram, bro. 50 billion. I've seen this company's earnings grow up from 20 billion to 30 billion to 40 billion, now 50 billion a quarter. If they could just sustain 50 billion a quarter, not even growing, just like sustain, you know, grow at a nice little rate, probably get to like 55, probably get closer to 60. Bro, this company's a cash flowing machine, just like Google. This thing is gonna be sitting on piles of cash. I don't even know their free cash flows right now. I gotta look for the more in-depth earnings, but this was just like the basic earnings that came out. And I'm just gonna put this quick video that explains it real quick on what happened to Meta last week. If you guys may have missed it, about their one-time tax charge, which no biggie. We're gonna have to see how much PTSD, and honestly, it's gonna come down to how much the market could turn over. But I already gave you my price targets, bear case, bull case. Let's see what this video said.
Revenue growth and expectations adjusted earnings at $7.35 at the head of S&P 669, but that includes a one-time non-cash income tax charge of $15.9 without that one-time charge, which is due to the big beautiful bill, President Trump's big beautiful bill that would have been the PSP. Revenues are also ahead of estimates. Daily active people ahead of estimates, 3.54 billion versus 3.49 billion estimated. And the average price per ad was up 10% in the quarter versus an 11% gain that the street account estimate had anticipated. Now, in terms of Q4 revenues, the company is guiding to Q4 revenues between 56 billion and 59 billion. That compares to the 57.25 billion estimated. And they say the outlook reflects an expectation for continued strong ad revenue growth, partially offset by lower year-over-year Reality Labs revenue in the fourth quarter. We're going to continue to dig into this. It does seem like everyone is working through this one-time non-cash income tax charge.
So basically, that's what the street is all caught up about. That one-time tax charge that Meta got hit with, that sent their earnings per share, GAAP EPS, 83% down year over year. And with his reputation, it's not the prettiest sight, I'm gonna be honest. So you just gotta take them out their word. It's a cash flowing machine. You heard it, revenues probably next quarter will be like what, around 55, 56 billion. This company is growing revenues. And honestly, that's not even the most important thing. The most important thing is their CapEx. So CapEx is a whole nother story because the whole market right now, the whole market this year, last year, the year prior, it's all built up on CapEx. We don't know what this bull market is without CapEx. From Microsoft, from Amazon, from Meta, from Google, Oracle, OpenAI, AMD, NVIDIA. Really AMD, NVIDIA, you know, the chips are different, but the cloud providers, bro, CapEx is what this market is built on, and Meta is going crazy with the CapEx. And they're not a cloud service provider, but they are building their data centers. They got Llama. They got some LLMs. They could, you know, partner up with some cloud boys. They got it. They got it. Meta knows what they're doing. I'm gonna take this leap of faith. Hopefully this plays out, and I'll see you guys on the other side. But yeah, betting big on Meta, and that's it, guys. NVIDIA shirt. Peace out, man.